Good afternoon and welcome to Bull Market Stock Show. This is your host Rian Hobson, and we're doing actually that you must not fight the market. I would say, honestly speaking, as you all know now, it moves in ranges. I can see the Australian, the British, the Euro actually gaining a bit of momentum this morning, but we all know it will reach that strong resistance and then it will just push back. Now, um, even gold, oil, same thing. It will just hit resistance and then it will just go back down again and then suddenly even the dollar index the same story. And as I explained the last time, the Federal Reserve market also basically the whole guide for commodities stands like Nasdaq is slightly going up, but obviously it's not what we know where it goes robustly up. So it's literally being choked actually every single time. And so basically there is some heavy news coming through on Thursday. Now I'm not sure will the market start to move tomorrow, because also you need to take into consideration those of you who like to trade forex and also your commodities and equities. There is New Zealand news that will come through, their monetary policy stance, which we all expect that it will be dovish. They will not do anything. Maybe they're going to do something, but the odds have it that excuse me, they will not do anything to tomorrow at that meeting. Now, there's also news that came through that the Chinese, this is now being reported on Forex Factory, it also was reported on Bloomberg, and then it also got reporting on investing.com. And now I think you guys need to look at this news as well, that the Chinese is actually buying dollars quite aggressively. Now, it is quite weird because the last time they said they want a stronger currency, the Chinese RMB, so that they can curb the commodity prices. Because obviously they're buying commodity prices, so they will be much cheaper. So they said that they're going to have a stronger currency. Now they're backtracking and they're starting to buy dollars. And this came from three sources. Excuse me. This came from three sources. And it was basically on Bloomberg, Forex Factory, as I said, investing.com. And so the news sounds legit. We all know that the Chinese is actually likes to hide information, but this is actually a bit serious where they start to buy dollars, which is basically manipulation because they want to devalue their currency and buy dollars so that they press the United States dollar up. I don't know what is their strategy regarding the story, but as the three sources were saying, they're starting to buy dollars, and that's why the dollar is sitting there at the dollar index at 89, around 89. So it's just sitting there. Now, the news coming on Thursday, basically, I will do basically nothing until Thursday to see what is going on. I'm not sure will the market get direction from there, but the big question is, will the Federal Reserve panic when that news breaks out? Now, that is where it can actually shape. The one is the Federal Reserve, and two is the market. Will the market also start to panic? Because once the market start to panic, Federal Reserve will start to panic, the federal government will start to panic, and that is where maybe all hell can get loose. Now, there's some serious amount of news that come through. One is the GDP number that will come out. Two, it is the job claim numbers. Well, it comes out basically every week, but the GDP number will be important. And then you have the job claims number, durable good number, and then the main number for that 2:30 on Thursday. Please don't forget it. I'm just not sure. Will the market start to move tomorrow on that news, or will it start to move on Thursday on that news? But the main news is actually the personal consumption expenditure. Now, if that news is strong, which we all expect because there's some record amount of savings in the United States, and the people will feel because of the high inflation, then normally people want to push away the money. So all they spend it or they invest it into stocks or something because of the high savings rate. I mean, we're sitting with the highest saving rate in the United States currently. So the personal consumer expenditure can be a bump number, a heavy number. And if it's a heavy number, then it means the consumer in the United States is actually well oiled up. And what the market will only see is spending. And they can actually, from there on, actually say that the future or the future expectation or inflation expectations will be much larger. And that could be actually a problem. So I'm not sure, will that be the case for the market for finally getting direction? Well, if the dollar come out strong, then we will definitely see a correction in the market. If that PCE number is in line with what market forecasters are saying, I'm not sure will the market panic on that, because the market forecast about the 3.5. Now, a lot of calendars doesn't show that news. One, investing.com doesn't show it. Forex Factory doesn't show it. The only one that I know, which I use, is Trading Economics, and they show that number. That number is extremely important to show how oiled up is the US consumer. And if that number is high, I think people might to start to speculate that we are in for one hell of a inflation, and that will also signal that the Federal Reserve needs to actually put on the brakes quicker, earlier than later, because then it means we will see much more aggression in June, and they will rather not wait until inflation reach a higher level. Now, on the other side that spooks the market is actually the analyst on Bloomberg, CBNC, or other channels. If you watch them or follow them, even on YouTube, Fox News, CNN, you name it, they all, not much CNN, but they all talk about the high inflation. People have some weird predictions there, about 20% next year if the Federal Reserve do nothing and run the economy hot. Some people have it at 10% this year if they run the economy hot. So all those people that talk the same thing over and over and over again can actually cause a panic in the market. Look, I would rather look at the number on Thursday to see if the number is high up, and then obviously I will basically say, whoop, we will see the Federal Reserve start to become aggressive and put on the brakes. Then we will see a dollar quite aggressive, and we will definitely see a market correction. But for now, honestly, for today, it will just go to the resistance and then come back. Look, I have no time for that child play games where it just moves in ranges. I absolutely hate ranges. I like where it takes shape. Where if it goes down, it goes down. If it goes up, it goes up. And I did actually say in other podcasts that we will see a correction first, and then we will see maybe the Australian, New Zealand dollar, euro, NASDAQ, Bitcoin climb actually higher. For Bitcoin traders, if that inflation number come out strong, then it means that the cheap money will go away. And when the cheap money is going away, that is where we'll see a bit of trouble for Bitcoin. Then we might see it actually go lower down, because then people's going to run in and get some cash because of the high inflation number, because people will think that the Federal Reserve will start to slam the brakes harder of what is being forecast in their minutes. Now, that actually spooks the market, and that's why it's moving in ranges. It's absolutely boring to trade for the last few weeks. Trading, it's really been boring because it's just moving in ranges the whole time. So I would say don't fight with the market. Rather wait for Thursday. If Thursday's news is also disappointed, then you have to wait for NFP. NFP is disappointed, then all eyes will go on to the Federal Reserve. But rather don't fight with the market and try to gain money here and there based on ranges. Maybe you can open up a trade and leave it because it will just go in there. But what if it really now slams down or up? And then you're sitting with a big mess. So I would say don't fight with the market. You don't have to trade every day. Just sit, wait rather for Thursday. I think the market will take a bit of shape on Thursday. depending on what is the outcome of that inflation number of PCE and also the GDP for the United States. That's it from my side. I hope you guys enjoyed today's show. So please send your comments if you have questions. You can inbox me on Facebook or on Twitter or even on YouTube. You can text me and then I will see if I can answer your questions. So that is it from my side. Enjoy today. Don't bother trade. And then definitely on Thursday, the market, I think, will start to get shape. Bye-bye.